And we're live this week in Coverager, the July 31st. We are in hurricane season. I am in podcast headquarters in Naples, Florida, ground zero for Hurricane Isaias. Don't even ask me to spell it. It's like all vowels. We'll just
But is
call
it
it.
a female or a male name?
I
I
don't even
didn't pick.
know. I don't
I
know.
think
Just kidding.
yeah.
Yeah.
So hurricanes coming down. I wanted to give a shout out to my wife, who you can't see it, who's reminding me that I have to say good morning, gorgeous to her. She has the compliment, say good morning, handsome, and I'm
Okay.
going to be handsome because this will be the last day of my COVID hair. I'm going to get this shaved off. So welcome,
You're
July.
lucky. You're lucky you still have hair. That's what I can tell you.
Um,
Cherish it.
Well, it's long, so it's covering. It's like that spray stuff that you can cover the spots. My hair's long, so it covers a lot of
Yeah.
the bad
That,
areas. So we'll leave it like that. July 31st. It's early Friday morning. Shefi, good morning. Avi,
Good
good morning.
morning.
good morning.
Yeah, so in this week in Coverager, I'm going to kick it over to Shefi for the week's top story. Go, Chef.
Top story. Okay, so within the context of insurance, the top story or the most clicked story was the introduction of Pure Gold by Pure, the insurance company for high net worth individuals. I don't know exactly what that's like, but I can sense it. Anyway, the whole idea was Pure Gold is basically a loyalty program. And the idea is that if you are with Pure for 10 years, you may qualify for some money distribution allocation later on. So why does that make sense? Well, basically, this is a retention strategy. They don't want now. So we live in the world of the internet. Even the high net worth individuals like to shop, and it doesn't necessarily mean that if you have a lot of money, you don't care about money or vice versa. It's all over the place. We're human beings. We're complex individuals. Some of us like to shop for A and not for B. Some of us shop all the time. But the idea is from pure standpoint, how do we retain those that are loyal to us, especially because the market is more competitive. So interesting. Definitely the coverage audience paid attention to it. And when I think about this, everybody's in the coverage audience, everybody's competing with one another. So who knows who's going to be one to kind of duplicate this strategy or think about it. Avi always likes to point out to me that especially during COVID, this is becoming more and more a game of retention, especially because simply put, you want to hold on to what you have. So that was within the context of insurance. That was a popular story. Outside of insurance, this is a bit too soon, but definitely one to watch. Rocket Companies announces plans for IPO. We first started writing about the company Quicken Loans, which is part of Rocket Company, when they acquired dictionary.com. And to me, that was a perfect example of somebody that is in the mortgage loan space, et cetera, all of a sudden buying dictionary.com, going out of their core, especially because they wanted to use the platform for advertising. So we're talking, I think the IPO price range is like 3.1 billion, but they've got so many sub brands. So they operate in used auto sales platforms, digital media. They obviously have a platform for title insurance, right? So if they're going to continue to struggle because of COVID, and by struggle, I mean less revenue, it's so easy to just focus more on insurance, or especially areas of insurance where they think that they can earn an extra buck. So that would be my insurance, non-insurance focus. The other thing we've heard, and this is the last thing for me today, I think, is a bird told us, take your advice, right? Lemonade is working on their acquisition strategy. This isn't the first time we're telling you this, right? There was an instance before where there was a gentleman working for Lemonade. He's no longer working there, and part of his job was to look at relevant acquisitions for the company and what is that going to look like. But right now, Lemonade is under the public eye, and the public may understands differently, probably insurance. Nonetheless, one to watch everybody's watching Lemonade, but this area specifically in terms of who they're going to acquire, what's that going to look like. So
A lot to
that is
unpack.
all.
I know, a lot to unpack. Avi, Pure, you've been you've been the Nikita Khrushchev of retention business, banging your shoe against the UN table and talking about how important it is. Insurance is essentially a retention subscription business. You can
You
potentially
know,
keep a customer for a very long time, and I'm not surprised. Like from Pure's perspective, I know Pure. I know Ross Buckmuller, the CEO, and what he's built there from scratch. And it's to me, Pure is a benchmark for other companies. When I hear startups trying, when they quiz me on, should we do this or should we do that, I always tell them, don't focus on Lemonade. That's really not repeatable. Focus on Pure. That was built from scratch in a pre-digital era, and look what they've done. And the market share that they've been able to carve away from Chubb and AIG in the high net worth space, and a lot of it is renewals and the way that they treat customers.
I said, and I still say it, I think insurance is the best subscription business there is, because you always need it,
Yeah.
unless you
Or you're
move
forced to buy
on.
it.
Yeah, it's really the best subscription business. And I was speaking to the CEO of a insurtech startup, and he really likes the Pure model. He's a member, so that means he has some
So he
money.
understands. So he gets to see
understands
it firsthand. Yeah.
exactly, and
Yeah.
he didn't come from insurance. Now he's in insurance, so he really likes the model. And it was interesting to me, and I was talking to Shefi about it. So it's not easy to build that kind of sense of belonging and like this members club.
Exactly.
And it's a thing. You need to really like be special to be able to do it. And it's you won't see many. You'll see really like the leaders, and then not much elsewhere. And we were talking, for example, like Hippo, their offering of the maintenance service, helping people repair things around the home over the phone, to save them money. So I was asking Shefi, do you see a rich person getting on the phone trying to fix their AC? They're going to bring a repair guy because they can pay, and they don't want to be bothered with it, unless it's someone, I don't know, someone that really likes to do these handiwork around the house. So
for the Pure customers, the repair people live in the house, the guest house.
That's nice. That is nice. So that's the thing. And I wonder now, like if you look at, for example, at Lemonade, and they're very well kind of accepted within the tech community. Those startup founders that go on for an amazing exit, and now they qualify for a Pure, membership. Do you think they will go to Pure because, we have so much money, or do you think they would prefer the tech provider, the one that they stuck with as they grew? That's an interesting question. I wonder what the future for Pure looks like, and because I think it will impact other companies that are trying to attract that client base.
Let me quiz you both. Who's the largest writer of high net worth individuals in the United States?
Chubb?
I thought it was AIG, but
State Farm. Do you know
no
why?
way. Why?
Because they State Farm got them before they were rich, and then when they became rich, they just never switched over. I can tell you from as someone who has sold Chubb's Masterpiece policy, there's a big difference in coverage. The way the Chubbs, the Pures, the AIGs, Nationwide has a private client group, Pure. It's different. All you need to do is look at like California. Most of those companies have some sort of like private firefighting. So during times of wildfire, they'll come and like foam down your house or do things of that nature. It's a different product. And so to your point, Avi, what you were just saying, yeah, like if you are wealthy, you have a different set of exposures, a different set of responsibilities, different set of liabilities as well. And those companies have specifically designed their product for that kind of customer. So I think it does matter. I don't know if Pure still does this, but I remember you had to pay to get membership. Like you had to pay to get in. It was a status symbol, but it's a reciprocal, meaning it's like a mutual style.
You get the money back. Yeah, you could get the money back.
They're part owner. Once you're in, you're part owner, and you're basically, it's like a factory mutual. All the factories kind of get in. You all insure one another. All of these high net worth individuals are essentially insuring and reinsuring one another. So there's a bit of a status that comes with it. I'm not wealthy.
Not yet. Not yet.
I have ambitions.
You'll get there.
So I'm not exactly sure. I do have some private client brokers that I can speak to about this, but it's a different field, a different world than, what we traditionally talk about with the hippos and the lemonades and all of that. Pure's in a different stratosphere.
Yeah, I think really, if I look at another company in the insurance space that is trying to replicate that model in a way, not specifically going after high net worth in a different space, one that is really trying to cater to a specific group is vouch insurance. Technology startups, there's like the whole, you have to raise to be funded to get an amount of funding to be able to qualify for their coverage. And I think it's very smart, because once you do create that sense of community and belonging, it's beyond the price. That's what I think. Because again, they're telling you, listen, you've built a startup, you've raised money from investors. Do you really want to take that risk? You've bought this beautiful painting. Do you really want to take that risk?
Yeah, exactly.
So I think it's really interesting. It's not easy to execute. I really, as I said, once Vouch establishes themselves as the go-to, technology startup insurance provider, it's not going to be very easy to move them. It doesn't matter who comes in; it's going to be very difficult.
Well,
so yeah.
Shefi, I just interviewed. So Thimble just came. I published like 2-3 weeks ago, broadcasted on the Coverager podcast. Foreshadowing, Next is coming up in the next couple of weeks. Good use of words there. So I think Avi's on to something, and I think that is where, so Hippo with the smart devices and the maintenance, Lemonade with the charity angle. Yeah, like you can't just sell an insurance product. I think there's a tremendous amount of value in building community, and it's, to me though, it's is it real community, or is it like Minnesota nice? They smile to your face, but behind your back, they're not so nice. I think what Pure has been doing this for so long, it is truly a community. Like it's a reciprocal, mutual style thing. They have Pure Gold. I think that particular customer base wants that. I'm not sure how much traction Lemonade can get with the charity, or Hippo with, the types of things they're doing, but I don't think they have a choice. What do you think?
So 2 comments I'll make. One comment is, so Avi thinks of Vouch and I think of Root, simply because the way I see this is, you want what you can't have. And Pure has that, because not everybody can get accepted to their program. And when I think of Root, what I thought was really brilliant the first time they created their model is not so much the telematics, is basically saying, we may decline you.
Yes. Yeah.
All right. They're kind of really upfront about it. And that creates a sense of, let me see what I'm worth to them, what my score is. So that's my first comment. And I think in terms of marketing, then that's thumbs up. The second is, every time I hear community, obviously in Coverager, we talk about the community all the time. And I may sound controversial here, but try to follow along.
Lay it on.
Yeah. So we love communities. It's just, it's hard to measure communities. And the question to me is, did that community exist before the insurance element came into the picture? And an example is LACA from UK, where they do the bicycle coverage, right? And they always like to talk about the community. Typically, fitness and vitality in the same mindset, right? If you're a community of runners, you're a community of runners with or without the element of insurance, right? So that community, you didn't establish a
Right.
community. The
You
question
don't
is,
own
do
that
you want to
community. Yeah.
belong, right? Do you want to belong to a high net worth club? And it's a conflicting. There were surveys out there, right? And Chubb said, well, they're not comfortable with the term, and I don't even know what term they are comfortable with, ambitious or whatever it is, but nobody wants to be called the ultra wealthy. And what
Yeah.
does that even mean? What does that even mean? Because Mark Zuckerberg is ultra wealthy, and then you got Thomas Tull, right? We just covered Acrisure and their acquisition of Talco's AI insurance business, right? So you've got this billionaire that wants to play even deeper in the insurance space. He's coming from the entertainment industry, and I'm more familiar with Israeli millionaires than I am with American ones, but I'm catching up. So this is a sense of, is this really a community? Because I remember when I love reading reviews. There's there's not a lot of reviews in the senior market space, but there are reviews on companies like Pure, and you can see when they're frustrated if a claim didn't go right. And we said, how much technology did they want to use? I heard from an adjuster that there's obviously all this 3D virtual inspection tools. They don't want that. They want people coming into their home
Oh,
and doing the
yeah.
job for them. They're not going to walk around with their smartphone
Yeah.
camera,
Yeah. Definitely.
right? So you've got people that are used to service, and service is something that it's hard to measure, right? Avi has a great. Avi, you should talk. You should talk about the example with that
LeBron
company
James.
that's
Oh,
no with that cleaning service.
the cleaning
The lady that
service.
brings her dog to the office.
The lady that brings her dog.
It's popular in New York City. I'm not helping you here. They do
Regardless,
service.
while
Yeah.
you're Avi, while you're
It's
thinking of it,
yeah.
so Shefi, you're hitting a good point, right? Like, I think it's delicate, right? You can't
It's
you,
a yeah.
you
It's
can't
an
force
interesting
a
debate.
community.
Yeah.
You can't
And
force it.
you know what's interesting, Nick? When you think about that, and as you know, Chubb did a big survey. I think it was last year, and they found that even high net worth individuals begin their search for insurance online. And as Shefi said, some do not want to be in that category. Like
Yeah.
some like if I was rich, I want service. I don't care. I want everybody to know that I'm rich. I don't want to be bothered with my peasants or whatever. That's how I want to be.
Shefi, where did
But
you find him?
you know,
We're blood. We're related by blood.
but that's the thing. Like some people care about that status symbol, and when you look at Tesla, for example, and people that own Tesla are comfortable. We could say that at least. And we talked about the insurance, and people said, I don't care, it's Tesla insurance. It's more expensive than Progressive. It's more expensive than Geico. And I wonder if this is kind of a new generation of, the Robin Hood investors that don't want to pay that extra fees, although they're making money or
Oh,
this.
that's
So
been
it's an interesting
happening.
thing. Yeah,
That's
yeah,
been
it's interesting.
happening. It was I think it was in the 90s that book The Millionaire Next Door came out and talked about, the vast majority of millionaires sort of blend in. You would never know, their favorite vehicle is a pickup truck, and I think there's something to that, Avi. I think there's a group there that's don't feel wealthy. They're uncomfortable being stigmatized with that, and so they just go about their everyday life. And Shefi, I think that's why State Farm's the number one writer. I think it's that group that bought a $200,000 home, and now they're worth $10 million, and they have a $1 million home. But it's like, I like State Farm.
Yeah,
It's
yeah.
affordable, and so they stay.
And maybe that's why Pure has its limits, and they haven't grown to be like every wealthy person is insuring with Pure, because also at the end of the day, and this is an example with LeBron James that I always find interesting. He has money, he's well,
Yeah.
and he didn't pay for Pandora Premium. He used to listen when he working out with the commercials, and he said, "I'm not paying." To him, it was a waste of money. And we always contradict ourselves. Like I would spend a lot on food, but when I, you remember the story, I had to struggle with shoes. which you wear every day. Like you can't put $100 on shoes, but you'll go and have a meal for $50, $70 and
Yes, of
no
course.
big
We're
deal.
we're irrational.
Exactly. And that's the thing. Like, and at the end of the day, insurance is insurance. I really like what Pure did because it catered to some that say, hey, I'm out there, I'm successful, I want to be part of a club. That's great. But yeah, it's a very interesting concept.
So Shefi, let's try to hold on to that a little bit. We'll anchor ourselves to that and transition to the next topic, which is Lemonade potentially looking to make acquisitions, which is what we've discussed for the last 2 weeks. It's like with their stock price being where it is, that would be the smart thing for them to do, is to use that high stock price as currency to buy stuff. Do you think they'll buy acquisition into market share, new business, or maybe acquisition to more community related stuff?
If they're smart, probably the latter. Because that's what the public that bought into Lemonade isn't necessarily a public that cares so much about insurance and KPI and old metrics. And we still see this debate going on. Meanwhile, it's been a successful IPO and kind of, the train has passed the station. So let them play to their strengths. And their strength is talking about, being a B Corp and, AI and technology, just trying to be more of that than burying themselves deeper into insurance. And their technology has limitations. So it makes sense for them to use AI in pet insurance and renters insurance. It's going to be a different game when we're looking at home insurance, and not to mention that insurance is a competitive space. But if you look at everything that's happening in fintech, and maybe some elements of prop tech, so I think the grass is always greener. In the case of insurtech versus the rest, it's absolutely true. So why, yeah.
Yeah, I think first, like their acquisition, I think they'll look, kind of like as a crowd pleaser, because they want to acquire a company that investors will say, oh, this is good, let's buy more Lemonade stock, the value goes up again, and everybody's happy. I think Lemonade's biggest strength, and we talked about this, is the price point. So if they could find a company that caters to people that are price sensitive, and maybe that could lower their customer acquisition cost, maybe, a money management app in the fintech space or something in that area, that could be smart, because that will also allow them to create relationships with maybe other insurance companies for other products. Because they can make the whole experience a little better, and technology and all that stuff. But the fintech space is getting to be very crowded, and a lot of banks are paying attention, and they're launching their own services. So you look at Monzo, and it's very hard when you have you don't charge much, and you still bring all these people in, but you're not making money off of them. And then comes Chase and Citibank, and I was like, okay, we'll do the same, and you stay with us because it's money. Who cares? Money is money, no fee, no big deal. And so it's going to be difficult. I don't know. I think if I was Lemonade, what I would do, very difficult.
You've got a lot of options. If you were Lemonade,
have a lot of
you've got a lot of
yeah.
options.
They do. If the stock price stays where it is, they do have a lot of options. So they can do all of the above, right? They could do market share, they could do community, they can go into a new line. They have that. I'm thinking,
Do you think it will be from insurance, the acquisition? Do you think they will acquire an insurtech startup maybe? What do you think? Or outside of insurance?
So here's I'm still surprised on this. Why hasn't Policy Genius and Lemonade formed some sort of a partnership? I would like to see that happening.
Should we connect them?
No, they can do their own job.
Why would you think it would be a good connection?
Because I saw this debate on Twitter, right, in terms of it was kind of going along the lines of you have to aggregate in insurance, or people want, it's either an aggregator play or it's a network effect, and people were commenting whether Lemonade has a network effect or not. And I think the consensus is maybe possibly elements or variations or to degrees. But in terms of being an aggregator in insurance, you don't have to be an aggregator when the price point is so low, like the $5 renter's insurance. But if you're moving up, if you're moving towards home insurance, or if you're talking about clients that have multiple product needs, right? Then maybe it makes sense. It makes sense to partner with somebody like Policy Genius. Policy Genius can have a more stable technology partner, assuming Lemonade wants to be fair in how they structure their commission or fees to those that refer business to them.
That's interesting.
So
yeah.
I was thinking of the S1 and the whole principle of graduating customers. So the whole principle of we're going to get them as renters insurance, and then when they mature and they move to homeowners, they'll stay with us. And frankly, I just think that's too long of a timeline.
Unless Lemonade helps people buy homes.
That's interesting.
They can give the money. Why not? They have it.
They don't have it. They have a stock. So they're going to have to make acquisitions. That's the only way they're going to in my opinion, to justify the valuation.
The mortgage industry. You think about being at the right moment. So companies like Matic and Covered, so they work with big mortgage lenders across the country. So when someone comes in and says, okay, I want to buy a home, they go in and they put in the information and they get quotes from different insurance companies, at the point of sale or at the point of the bank, for example. And people go on and they buy and they can get the insurance. So, I think for Lemonade to be on that platform, they could get there. And if they're comfortable with their price point, then probably the client will say, yeah, let's go with Lemonade. Although you talked about the whole concept of AM best rating, and if that matters,
it's a big problem.
Yeah.
I shared that article with you yesterday, but just in the past week, I've been getting a lot of phone calls and just having conversations about this, and it's they just don't have a big enough balance sheet. So even though Demotech is accepted by Fannie Mae, the big issue is that lenders are not going to change their tech systems. So lenders have a checkbox. AM best rating, what is it? Oh, Lemonade doesn't have one. You can't use them. Right? Big, huge problem. And I think the balance sheet that they have becomes problematic as they try to go to homeowners. So for me, on an acquisition level, maybe they try to acquire a cheap balance sheet. Maybe they try to acquire an AM best rating. Somehow they acquire a company that already has one and then piggyback on, like a reverse public. You buy a public company to go public versus you doing an IPO type of thing. So but they have a lot of options. I think Shefi's right. Like they could do a whole bunch of stuff here.
I think if you look at Experian, for example, and Experian gets people hooked up on the whole credit score, check your credit score, improve your credit score and all that. And then they make a ton of money from their whole lead gen business, from other products and services they present to their user base. I think if Lemonade really wants to make money without the whole like, oh boy, can we write this business? Are we going to lose money or this or that? Go beyond insurance, go into other financial products that you can do. I think it's going to be hard work for them to get into that space, but the money is there again, but it's not as automated that you would hope. Not all the time and all that stuff, but yeah, they have options. I think, they have the money, they have options. If they really wanted to shake up the industry, and this is an idea, and if it happens, I'll ask for my referral fee, but Root and Lemonade joining forces to disrupt the hell out of the industry. I think they're both very good at attracting customers, even though it comes at a cost, right? It's not cheap, but they have the guts and the money to say, we don't care, we're going to get that client, and they get them in volumes. And you know what? The success, forget the IPO and all that. The success is that people in the insurance industry, big companies, are paying attention. They care about Root and Lemonade. They talk about Root and Lemonade. So I think that would be an interesting move. I don't think it's going to happen, but I feel like Lemonade has a limit with with only the renters. And as you mentioned, the home insurance with their capital and the reinsurance structure is going to be very difficult for them to just go in. But yeah, they have the options. And if you really want to blow up, it's Lemonade and Root.
Shefi, I got an idea.
Okay.
They should buy Blackboard.
No.
The underwriters.
The more we dig into
the underwriters at Blackboard, they're saying the risk, the profits,
but
too hard to do for big companies.
AIG kind of winding that down? Like, isn't that?
Blackboard plays more into the middle market crowd.
But don't they have an AM Best rating?
Well, yes,
they do.
Through AIG, right? But it's through AIG. I wouldn't do any.
I don't know how. I mean, for how much would you sell?
No, I think when because it was prior. It was Hamilton, right?
Yes.
Yeah.
Hamilton and AIG, right?
I'm pretty sure they had
Two Sigma.
They have an
There's a
AM
lot
Best
of cooks
rating
in this kitchen that's called Blackboard, and I think that's part of the problem.
I'm going to give Lemonade some free advice.
Okay.
I would buy a cheap AM Best rating. Find something where you can get an AM Best rating and expand on that. I think that'll open many more doors. My opinion. Just I'm a connector, you know.
My advice is if you're not going to go with Root, which I think you should, buy a media company. That's my advice to Lemonade. Is this recording? This is on record, right?
This is recording.
Okay. Buy a media company and open it. Buy the Athletic. Buy the Athletic and give out the subscription. No more subscription. Open it for everyone.
Here's some foreshadowing. On one of my upcoming podcasts, the company I interviewed poached a creative director from a very, very large media company. So
they know how to get attention.
Stay tuned. Yes.
So Avi, you brought up, potentially going into other lines, other products. Shefi, Rocket, which is from Intuit. So I think a lot of people will be familiar with Rocket Mortgages and stuff like that. So that's the other way, right? So that's like fintech that it could start encroaching into insurtech. So
prop tech, fintech, everybody's eyeing everybody. Walls are coming down. So question is, what are you going to do about it? Obviously, if you have you're at the front if you have the technology to work with other partners. And I mean, just watch the space. I mean, we have been covering stories outside of insurance for a really long time now, because that's the only way to make sure you're ahead of what's coming. And again, insurance is in itself, in its DNA, insurance is a great product. As Avi said, it's subscription needed. Customers are indifferent. I mean, look at Amazon, how he's talking about his customers, right? They're constantly unsatisfied, right? Here with insurance, they're constantly silent. What more can you want? Unless you're really.
That's a good point. I think that nicely ties back to the community. So I think we're seeing it, right? Tesla, Amazon, now Rocket. There's going to be encroachment in. And I think if you're in the insurtech space working in the other direction, I think community becomes vital, because I think a lot of these fintechs and other models, other frameworks, other lines that are trying to encroach in, they're going to be transaction based. They're going to be, so they're not looking for community. They're looking for quick. We're already selling you this. Hey, buy this insurance from us. They're not really establishing a community. So I think it becomes even more vital if you're on the insurtech side that to keep the subscriptions going, you can't just sell them insurance. It's got to be something beyond that, where people feel like they're part of a community. They have a stake in something that's a little bit bigger than themselves. Thoughts?
I had this theory a while ago, and if you look at the old successful business people in the 70s, 80s, 90s, and then you look at the new successful business people in the 2000, 2010, 2020. Mm-hmm. So it went from jocks, the best salespeople with the confidence, here's a product, pay for it, to geeks, Jeff Bezos, Mark Zuckerberg, the Google founders, and geeks, not because they love computers and all that, because they are geeks. And if you think about the way of the geek versus the way of the jock, a geek doesn't have maybe the confidence to come in and say, here it is, or let me ask you out on a date one time. They will give you clues because they want to increase their chances. And if you look at Amazon, if you look at Google, if you look at Facebook, they're all platforms. They're saying, look, we're not here to sell you our product. You don't have to pay. We don't care if you buy an Amazon toilet paper or batteries, or you go with Duracell or whatever that is. They want to be our best friends, and it works because they're not fixed on, you have to buy Amazon, you have to subscribe to Facebook. It's still free. You want to buy, for the third-party apps, you want to buy a tractor to put in your farm bill? Sure, we'll take a commission of that. Google, here, who are you looking for? Look, you want to go and look for a AOL email? Not a problem. We'll show you the results. You want a Yahoo email? We'll show you the results. And that's the idea. And I think when you look at insurance, it's a transactional business. It is price driven. You'll never get to a place where you're mainstream unless you really have the best price by a significant amount. And that's why you need to look at how do you please a broader audience. And that's where you go beyond insurance. Help them compare, show them other things, be their friend. And that to me is like the ultimate answer. If you want to grow in insurance, you can't do it with insurance. You have to think beyond insurance. And we asked this question a few weeks ago. We said, what if the best way forward for insurance companies is not insurance? What if you could make money not from insurance? Would the CEO of the insurance company be mad? Would the investors be mad? What are you doing? It's not from the premiums. I mean, here's $2 billion, but it's not from insurance. They won't be mad. And I look at a company, and we're doing some research on behalf of a client, Norton LifeLock. Before that, it was LifeLock, and before that, it was Symantec. So Symantec bought LifeLock. Symantec is the company behind Norton and the antivirus. And the sales went down because people aren't buying as many PCs as they used to. They have their smartphones and iPads or whatever, and they really wanted to hold on to that business. So they bought LifeLock, and they bundled LifeLock with the antivirus.
Yeah.
But they're targeting a very, like a senior demographic, kind of, to put it in a nice way. The people that still are afraid, still have these computers, the Windows computers, and they need the antivirus and all that. But that's not the way to move forward. You have to sometimes let it go, say, okay, I've reached my limit here. Where can I make more elsewhere? And that's what it is. That's what at least our opinion is.
So I think this is what we've been talking about the last few weeks. I think Lemonade's trying to do it with the charity angle, building a community and saying, this is bigger than us. I still like the hippo approach. I think there's something there to, hey, we're not just going to come in and protect you and help you with your home after it's damaged. We're going to start building a business model that's going to protect your home before it gets damaged.
It's a step in the right direction, and definitely. Yeah. And I know people are very happy with the fact that you can go on the phone and, they'll give you some friendly advice how to repair stuff around the home. And it's a money-saving product, and people love money-saving products, and that's great. Does it have scale? Is there a lot of competitors in that space? Yes. So you need to kind of see, but again, it's a step in the right direction. For Lemonade community, social give back, I think that's bullshit. I said that. I don't believe in it. But it was a step in the right direction for them for the IPO. Yeah.
The point, Shefi, is that I don't think anyone's coming in and saying, we're going to create a mutual insurance company and just sell a policy.
Oh yeah.
There's an effort here. Like, how do we differentiate ourselves? How do we add some level of community or something, a hook, a gimmick, whatever?
Well, gimmick works. They may have a definitive time in which you can play that game, because as you say, even with Pure, when it announced Gold, it was talking about the charity element. And I know I've been saying this, and Avi and I disagree. Avi and I, frankly, disagree a lot. But it's one, it just shows you that the space is complicated. Two, you do have a lot of opinions, and it's a matter of, at the end of the day, what you believe in and what you're going to execute with confidence, which is really important. And the charity element sticks because how many people know the name of Traveler CEO versus how many people know the name of Lemonade CEO?
You know
This is
why
the
the
question
charity
for,
sticks? So let me tell you why the charity sticks. It
because
sticks
people say
because
one thing
people
and
no, because
act a
people are
different
too
way or believe in a
embarrassed.
different
No,
way.
people are too embarrassed to say that we got this company Lemonade because of it was cheap. It was $5. People don't want to look cheap. That's the
Precisely.
thing. So
We
they
agree.
it's yeah, no, it's an excuse. They'll say, "Oh, I bought from this company because they have a give back." Come on. You really think that those 10 cents is going to make a difference? You give more on a daily basis. I bet you, if you really care about charity, you do that. I think it's an excuse. I think people don't say what they really believe in. That's the thing. And you know what? It
And
goes
that's
for a
why
lot
it
of people.
works.
Yeah, exactly. But you know what? It's Lemonade knows they reached their limit with the social give back. They know it, and we know it because everybody's looking. Eventually, people are going to open their eyes. They're going to say, "You said you're social. How much did you give to charities? How much did you give?" And we know a few things and all that, but it's
So
there's
one
a
person,
limit to it.
okay, one person is intelligent, the crowd is stupid. I don't think people are going to ask that question.
If you
The
ask, I
the
mean, if you ask
average Joe
Bezos
Schmo from the street
now,
is not going to
well,
ask, Lemonade, how much did you give for charity compared to Travelers? They're not going to think
you're
that far
right.
ahead.
But once the price goes up, that premium goes up, no one is going to say, well, you know what, you're giving to charity, I'm willing to pay
Yes,
more. So Nick, you
yes.
said they're going to have to increase their prices, right? So when that time comes and they increase their prices, they're going to lose clients. It's very simple. And when that time comes, when the person moving from a building that does not require renter's insurance to a building that says, okay, you don't need it, and he's going to cancel. That person is going to cancel because they didn't want renter's insurance to begin with. So they have a limit. Lemonade has a limit. They had a great story that took them somewhere. Now the question is, now it's time for the real business. Now it's time to show that you're real.
I would like to ask the audience, hopefully you've lasted this long. For those of you that are out there, if you can recall any stories of carriers that grew incredibly fast, where it either way, where they were successfully growing very fast,
Primerica.
or the opposite. If you could share those, DM, reach out to Avi, Shefi, or myself. I think we're going to dig into this a little bit more because just my experience. So 25 years of insurance, except for Geico, it never works out well. When you run an excessive combined ratio, sooner or later, you can't just say, okay, time to raise prices. Because like what Avi said, most of the time they're going, if there's a equivalently rated company somewhere else, they'll move. So I don't know if the community element's going to help on that, but in my experience, just watching the industry, companies that have grown fast or have had combined ratios in the hundreds to get market share with some sort of toggle switch where, okay, we got our market share, now it's time to back off. There's always some impediment. It's always a regulator comes in, throws a wrench in it, or something happens with your reinsurer, your rating goes down, and then you get into a death spiral. But I want to hear it both sides. I can only think of Geico, but I can name a whole bunch of companies like Kemper and Arbella in New England that grew too quickly and it harmed them.
So from an agency standpoint, A.L. Williams, which turned out to be Primerica eventually, become an insurer, they grew really fast. And the reason they grew really fast is two reasons. One, they did, the whole MLM, and they recruited a bunch of agents. But the other thing is they came in at a time where whole life insurance was the most popular product. And they said, hey, buy term life. It's more affordable. You'll have more money. And it was a product that people really adopted. It made sense for them, and they grew so fast. They grew faster than Prudential. And then I think, I'm not sure if that's the case, but Prudential has a company that's called Primerica, Pramerca. So I don't know if they said, oh, you say Primerica, we're going to do Primerica to, stick it to you. I'm not sure, maybe not, but they grew really fast because they had a great product. Lemonade doesn't have a great product. They have now with the $5 renters insurance, but it's not a great product for everybody. State Farm is the same price. So once, as you said, Nick, the prices will go up, customers will go down. And but again, it's now is for them the real business. Let's see what they do.
I would like to end by asking the audience if you are a commercial agent or broker. We're running a survey. I'll have Shefi and Avi kind of fill in the details, but we want to get your finger on the pulse, how you're using technology, how you're interacting with insurtech. Shefi, Avi, you want to put a little more color to that?
Yeah, so it's very simple. We want to understand the mindset of insurance brokers, what you're doing right now, who your technology partner is, who your technology partners should be going forward, what kind of tools you're looking for from carriers, and obviously if there is a shift in where you want to focus on your business, right? If the mix of the book, right? So it's somewhat lengthy, but we really appreciate your time and
15,
we've
20
got
questions. Yeah, it's not
yeah,
lengthy. It's
50. It's
pretty
not
short.
that,
Yeah.
it's not 5 questions, but
Yeah.
thank
So
you. That's what we were going to say.
if you're a commercial broker agent, we'd love to hear from you. So please let us know. I think it'll be very helpful for you and your stakeholders and partners going forward as we sort of share some of that research. So July 31st, happy August. We're here. Summer's almost over, except I'm in Florida. I got 3 months left. I'm going to be safe during the hurricane. If it happens to affect any of you, please be safe. And as per usual, wash your hands, wear a mask. It's not over, so be kind to one another. Avi, Shefi, happy Friday and have a great weekend.
Thank
Thank you,
you.
everybody.
Bye, everybody.
Bye, everyone.
Bye.
Bye.